Welcome back to my channel, Balance Sheets Matter. I do stock analysis videos, so if you want to get good ideas on potential stocks to buy or value traps to avoid, make sure to subscribe to my channel and like the video. And if you do want me to look at a stock, you can leave it in the comments below, and I may do a stock analysis video on it. But the stock we're looking at today is none other than Lululemon. And if you've been following the stock at all, you've known it's taken quite a fall, from highs being over $500 down to $162 today, which is over a 65% drop in price. So I'm going to dive into the financials and see if there's something really deteriorating behind the scenes with Lululemon, explain why the stock's dropped so much, if it's a value, where it could potentially be a value, and what we could possibly expect going forward for Lululemon. So looking at a few of the top level metrics here, I'm using Guru Focus. You can see their little Guru value band. It's predicting right now it could be significantly undervalued, but we're going to see if this is potentially accurate. The next thing to look at is the PE ratio. Right now they have a very low PE at 12.24, but they do have a higher forward PE at 13.21. What this means is that analysts are expecting the EPS to decline a little bit in the following year. So now let's dive into the financials. And you can see the revenue trend over the last 10 years was growing at over 22% per year. But now, based on this green line here, you can see the projected revenue trend is quite a bit lower. So as we go down, one of the first things sometimes I like to look at is look at the return on invested capital. And you can see the return on invested capital is still quite high for Lululemon, much higher than their weighted average cost of capital. So they're very good at getting returns when they reinvest into their business, although it has been creeping down a little bit over the years. But this should be expected as the company matures, and especially as we can see that the expected growth going forward is slowing. And we do see now that the revenue trend before, where it was quite quick and they were having years with quite good gains, as we saw, an average of 22% per year, there has been very little growth in the last few years. As you can see in the last year here, just over $10.5 billion to just a little bit over $11 billion. This is only around the $500 million increase, or about 5%. In the previous year, there's only about a 10% revenue increase. The next thing to look at, which is important for companies with big retail footprints like Lululemon, because they do primarily run all their own stores, is the gross margins. Because a lot of times companies, if they are dying and struggling, they will be reducing their gross margins to keep their sales up. And you can see it really does not look like Lululemon is taking any hit on the gross margins. Well, things were marginally higher in 2024 and 2025. Having a gross margin of 56.6% is still quite comparable to a lot of years. So that is one good sign for Lululemon, that they aren't experiencing any deterioration there. And they also have to consider that there are the tariffs now, and this is one of the reasons why probably they've taken a little bit of a hit, basically because the tariffs came in around here, of why it's reduced a little bit, and that could put some more pressure on the future, as that's a very dynamically changing situation, as we all know. Next thing to look at is the operating margin. On the operating margin, we don't want to see our selling and general administration expenses increasing at a faster rate than our revenue, because this will slowly squeeze the margins down, and is also could be the sign of a dying company. Right now, they're sitting just under 20%. Again, this is marginally lower than some of this previous years, but the previous years they did have higher gross margins as well. And if we look at the history, this is well within their normal range here. So I'm not seeing any deterioration in the operating margin as well. So these top line revenue and operating expenses are looking really good for Lululemon. The next thing we can look at is basically where's the income. They don't actually have a line for the interest expense. It's all grouped in other expense income. Sorry, Lululemon does their accounting a little bit different when they do that. Usually I have the two lines here for investment income and investment expense. And you can see right now, basically this other income / expense includes all the interest expenses and sometimes some others. And you're going to see the company virtually has no long-term debt, so they actually don't have any interest expense to pay. And if anything, they earn a little bit of interest on the money they have, which is very good, because it's really nice not having any debt or any obligations like interest to pay. They do, primarily having a footstep in the US, they do have a fairly high tax rate though, but that does still leave a very strong net margin. And we can see right now, 14.2% net margin. And this is very in line with the historical trend. there is a little bit of variation throughout the years, but 14.2 is very good. So overall, what we can tell from the income statement is that the company is still sitting in a very strong position. The main thing is, though, is they have had a significantly deterioration in their growth trend from previously averaging the last 10 years at over 22%. In the last 2 years, now it's been 10% and 5%. So that is a little problematic, and that is largely the reason why the stock is down. And we can see while their EPS has been growing, it did contract a little bit in the last year. That's because of the little drop in the gross margin there, though they were coming off a record high gross margin too, and they are buying back some shares along the way. Although this hasn't really been a very quick share decrease, even though, as I'll show you later on the cash flow statement, they do actually buy back, spend a lot of money buying back shares, because the stock before did trade at a very high P ratio. So we look at their balance sheet. You can see they're sitting on like $1.8 billion in cash, almost $4.3 billion in current assets. And we compare that to their current liabilities of just under $1.9 billion. And just with their cash alone, they could effectively almost pay off all their current liabilities. So this is a very good current ratio to have. And their total assets are sitting just under $8.5 billion with very little in intangibles and goodwill. One thing Lululemon really hasn't done is they haven't done a lot of acquisitions. So they have very little goodwill on their balance sheet. And even the intangibles are priced at a very low level as well. So when we see that their total stockholder equity here is almost $5 billion, that is almost all real tangible assets in their gross property, plant, equipment, and cash on the balance sheet. And you can see in the total liabilities here, you're just gonna see basically total long-term capital lease obligations. You're not gonna see any long-term debt because they do not hold any long-term debt. So that is actually a very strong position for Lululemon going forward. So now we look at their cash flow statement. One thing too that does jump out in the recent years is the CapEx, the purchase of plant, property, and equipment since 2023 has actually increased quite a bit. You can see before the levels were quite low, around, even from 2017, $150 billion, in 2022, $395 billion, and now they're spending almost $600 to $700 billion per year in CapEx. And we compare this to the cash flow for depreciation. Before, it was a little bit higher, and that's what you would expect from a growing company. And now those cash flow from basically depreciation expenses here, we're seeing from the money spent in previous years, is starting to catch up for them. So this might be one of the reasons in the short term that because of this CapEx spend, and they're going to depreciate it in the future years, that will put a little bit of headwind on their margins, because that's when they realize those expenses in the future years. That's going to be counted as expense then, not right now, and that will lower basically the income. So that is one thing to keep in mind. But the other thing is they are spending this CapEx for basically growth, expanding their stores, improving their supply chains, and other factors. So this could be a potential tailwind and potentially fuel some real acceleration in the future, because you can see now for 1, 2, 3, 4, at least 4 years now, the company really has been investing in itself to try to provide growth for the future. So, they've been very, very good at that in the past. So we're going to see if, with all the different little headwinds right now, that they're able to come out stronger and maybe get some re-acceleration. But that's what I potentially see as the management's vision there. And this is, what potentially could happen. But again, this does cause some short-term headwinds on their income statement, as it will lower their earnings a bit because of the higher depreciation they're going to realize when they start realizing these expenses. Next thing you can look at is the repurchase of stock. It has basically been going strong. And we see they have the free cash flow. They don't pay any dividend. They just take their free cash flow and anything left over, they're repurchasing stock. So that's the little overview of the financials. So now let's go into the interactive chart. So the first thing I'm going to look at on the interactive chart is the P ratio, since this has largely been why the stock has declined so much. Because if we bring up the PE, and you can see in the orange line here, basically right after 2020 here, they were trading at an 88 PE, and then even in the future years here, it was trading above a 50 price to earnings ratio, even a 65 at the beginning of 2024 here at the very peak. And frankly, this is just kind of an absurd valuation. It does show you how the market can fall in love with the stock, and because of Lululemon's previous growth, their very strong balance sheet, their no debt, this is one of the things that can fetch a higher price to earnings ratio. But then you can see how quickly the market can flip from just a little change, such as the revenue decelerating a little bit, and now they're down to a 12. So we kind of have to determine what is going to be a fair price to earnings ratio for Lululemon going forward. Another thing we can look at here, just kind of with the relative analysis, is let's take up the PE and let's bring up the price to sales ratio. And you can see right now the price to sales ratio is actually quite comparable to the 2009 low. So now let's bring back up the PE, and we can see during that time, well, Lululemon was also trading at about a 12 price to sales ratio, or 12 PE ratio. So, this could be saying that it's a little bit similar like this for the valuation wise, although I wouldn't expect to get to these really high valuations going forward in the future. And just to show, so you can visualize some of the margins here, which are always good to look at. Let's bring up the margins. And you can see, for example, as I was saying, the operating margin, has been, fairly stable. And I'm just going to shorten this chart because that one little blip just makes it look way, way off. And you can see here, actually, let's go 20 years. Just see there. You can see, relatively speaking, the operating margin here has been, pretty steady. It's not really on an uptrend. Maybe the market before thought it was an uptrend, but now it's kind of reverting back. We're not seeing this break down, so that is kind of reaffirming with our first analysis that things should be looking fine going forward, and the gross margin actually has, crept up over the years. So one thing we can do here is we can kind of project at different PEs what the valuation would be based on future earnings with our little price to PE without non-recurring income with estimate. So if we set this, for example, at a 20 PE, which is a little bit more realistic going forward, that does put Lululemon's fair value more at $266. And you can see based on the analyst estimates, which, they could be a little bit low right now. If anything, I think they're probably a little bit conservative going on in the future. You can see what the price would be at this PE ratio going on in into the future. So one thing, the reason why to check here is compare it against something else that has slowed in growth a little bit, which is Ulta Beauty, which is kind of in a similar adjacent type of industry. And if we look at their interactive chart here, we can see a somewhat similar thing happen is before, earlier in their growth stages, they traded at a much higher P ratio. They never got to an 80, but they were trading up to a 50. And things did eventually taper down here where they were, trading more at into the low 20s to, the low teens there, around the level where Lulu is now. So this could be a realistic range for a P ratio that Lulu could trade in the future if they do have a lower revenue trend, anywhere from say that 10 price to earnings to say a 25. And if they do get some reacceleration, well, that could be a very big tailwind. And with their stronger balance sheet, and if it does go back in favor with the market, it would be possible, but I wouldn't bet the farm on it that they get back to they get to maybe a 20 to 30. Just to give you an idea, if they were to get to a 30 PE, and put the 30 PE, you can see then in that case they would be quite undervalued. So let's go to the chart here. I'm going to do a little bit of my technical analysis. Not everyone likes it, but you can see before I have these two trends. And this one trend, I think, represents what they were previously on, and that was about 20% growth per year. And now this new trend here is kind of lined up with these bottoms and this here, and is a little bit under a 10% trend. So this is projecting what the trend they may be following in the future going forward, because I think it's very unlikely they reaccelerate to this 20% trend. And then these two lines here are potential just supports. This is the previous COVID lows. There's a little gap here. You can see how those potentially line up with the bottom of this trend here. But one thing I do want to bring some attention to is why this itself actually may be the bottom, as you can see actually how much volume has been occurring. So there's been a lot of buying and selling going on with the stock and has been moving down. If we kind of pick this point right from the bottom here, you can see how much volume has occurred. And if we scroll here, I want you to look at the price volume profile now, once this one goes away. And you can see there is a lot of volume that has occurred right at these levels here, where in the past, we had this huge long period of time where the stock was up here, and this ended up being the distribution phase. There was actually relatively lower volume happening at this time. So there is a lot of buying happening right now. This, could potentially be the bottom. It does line up with the COVID bottom as well. So, I do think the stock is a good buy. I've already bought it. I bought some of it a little bit too early, but I have been buying more. I plan, even buying more now, which I have been doing. But, you kind of have to be prepared that anything can happen. The stock can drop lower. There was this news that there's some investigations about the PFAs, the forever chemicals, into Lululemon. So, that could be a short-term headwind. That was one of the reasons the stock dropped a few days. And just one interesting thing I'll just show on more of my comparative analysis to other stocks is if you look at Ulta to Lulu, I just kind of find it interesting. These stocks kind of seem to be cycling against each other. And when you have these trends here, it's going up. Well, Ulta Beauty is outperforming. And well, what's been happening with Ulta Beauty lately? Well, Ulta Beauty has been doing quite well. And in this past history here, when it got up to the peak there, it did quite well as well. And then we compare this to Lululemon, and we get quite the opposite. When this trend was going up, that's when Lulu was doing very poorly. Again, when this trend is going up, Lulu is doing quite poorly. So that's just one interesting little tidbit. If you compare it against Ulta Beauty, and I'll just have the two stock charts up here, is they do actually have some inverse correlation. Now you can see a little bit more clearly here, from 2013 going forward. Lululemon basically went sideways until 2017, where Ulta Beauty put on a lot of gains. Then what happened? Well, Ulta Beauty went sideways for a very long time, and Lululemon went up for a very long time. Then it shifted back. Oh, Ulta Beauty had a big run. Lululemon, what happened? They went sideways. So I actually have been long Ulta Beauty. I did sell a little bit, actually around $700, but I still do have a little bit of position, and I am waiting for it to rally back. But you can see actually based on my Ulta Beauty chart here is this has been the top resistance where in the past I have basically sold the stock into, and I did some this time again, and there's a good chance it rallies up again. And this is just one of those weird little indicators on where money's moving, and one of these weird correlations that happen where you could say that when Ulta Beauty is expensive, that's the time to buy Lululemon. And we kind of are at that stage, or at least we were at that stage. It looks like it could rally back up. So maybe if Ulta rallies back up, we're going to be seeing potentially a bottom for Lululemon happening soon. So anyways, that's just a little bit of voodoo technical analysis. You don't have to take that too seriously if you want, but for Lululemon, it's really just comes down to a re-rating of what should their price to earnings ratio be in the future. Obviously, 50 is too high. Is it going to be trading a 10 to a 20 now? Is it going to be trading a 20 to a 30 now? But the company is definitely not falling apart. And if you do hold it for a longer period of time, say 5 years plus, I do personally think, although it's not financial advice, that you would get some positive returns on it. And that is one of the reasons I have been, buying the stock. So I hope you liked that analysis, gave you a little bit of insights into Lululemon, and, make sure to subscribe to the channel, like the video, and I'll see you in the next stock analysis.